Hi, you guys. I'm Phil Town from Rule 1 Investing. We're going to talk about a real character in the world of investing that Ben Graham, who's the founder of Rule 1 style investing, dreamed up back in the 1930s to understand how to properly invest and how to think about investing. This character is your partner as an investor, and Ben called him Mr. Market. Mr. Market is this conglomeration of all the stuff going out there in the stock market that creates price. So Mr. Market, your partner, gets to decide what the price is of everything you want to buy or sell. And the cool thing about Mr. Market is that he's willing to buy or sell anything you got, any day you want to do it, but he's going to set the price. And what Ben Graham realized is that Mr. Market is a manic, depressive, emotional character. Now, this is really interesting because, to me anyway, because there's been a theory over the last 50 years that's embedded in every single business school in the country that Mr. Market, if you wanted to call it that, is the most rational person in the world. He never prices anything improperly. Every single price is exactly the value of every single business, and there's no emotion going on whatsoever in Mr. Market. And this is just baloney. Warren Buffett has been laughing about this on his way to the bank for about 60 years. In fact, Ben Graham said Mr. Market is this manic depressive maniac that gets irrationally exuberant and prices things like the price is never going to go down. You should pay any kind of crazy price for something, pricing things ridiculously high. And Mr. Market is this incredibly manic depressive. When he gets depressed, gets off his meds, and all of a sudden, the sun's not going to come up tomorrow. And everything is priced at just dirt cheap, garage sale prices. And Mr. Market swings between these two extremes. Now, much of the time, he's on his meds, to continue that metaphor. He's on his meds and pricing things pretty close to their value. But occasionally, Mr. Market goes swinging one extreme or the other. And what Ben understood is that what we want to do when Mr. Market is swinging to the extreme of irrationally exuberant high prices, we don't want to be a buyer, we want to be a seller. And when Mr. Market is really depressed, we don't want to be a seller, we want to be a buyer. And it turns out this is exactly the opposite of human emotions. Human beings go with the flow and go with the crowd and get caught up in this exuberance. And if the market's going up, more and more people start buying stocks. And when the market's really depressed and it's dropped like a brick, people get really scared and they're selling at the exact moment Ben Graham said you should be buying. So Mr. Market is super, super important to understand as a way of thinking about when do we want to pounce and when do we want to collect our profits. And that means something really simple to Warren Buffett. We sell when there's greed and we buy when there's fear. We sell when the market's irrationally priced too high. We buy when the market's irrationally priced too low.